Do you think we're seeing the lines between public and private companies blur?
Absolutely. So it used to be that it would take 4 or 5 years for a company to go public, and then all the shareholders would get liquidity. And that happened to coincide really well with the vesting schedule of employees. It was 4 to 5 years vesting. But when it started taking 9 and 10 years for companies to go public, you had shareholders who were in good companies, but who couldn't get liquidity in the normal way. At the same time, the internet became a research platform for buyers to get access to information. When you have buyers and sellers interacting on the basis of information gathered through the internet, it starts to look like more of a public company.
What do you think is going to happen from the government perspective? The SEC has been looking into it more.
The SEC has recently looked into specifically the advent of special purpose vehicles that have been created to invest in these companies. They're concerning themselves with whether or not these funds were created for the purpose of skirting registration requirements. So I think the SEC is right to concern themselves with that question, because to the extent that there's a deliberate attempt by any of these vehicles to skirt the registration requirements, that goes against what the SEC is out there trying to do, which is protect investors. However, we haven't seen that activity, and we're confident that the special purpose vehicles will continue to be an important part of the ecosystem.
For our special report on Deals of the Year, turn to the Deal magazine. For ongoing coverage of deals throughout the year, visit the Deal Pipeline. There you'll find a wealth of resources to track transactions, including 3G Capital's groundbreaking purchase of Burger King, one of the most notable deals of 2010. Watch the Deal Pipeline's exclusive video conversation with Stephen Fraden, the Kirkland & Ellis partner who represented 3G in the $4 billion buyout. To find a comprehensive list of advisors who worked on the deal, turn to Deal Memo. There you'll see the names of the bankers and lawyers who handled each facet of the pivotal transaction. For a look at the impact the Burger King sale is likely to have on future private equity deals, read our analysis of the trend toward tender offers that all began with Burger King. Visit the Deal Pipeline today.